Hey, what's happening, guys? Dan Dyro here with another Options and Play video update. First off, want to say thank you for those of you that stuck around for yesterday's option session. You know, I probably sound like a broken record. I'm sure you heard me say this, but I mean, I really do enjoy the times we were able to get together, talk trading, talk options, talk the market. Yesterday, we actually spent a lot of time talking about moving averages, which is what I wanted to highlight just today quickly in the video. And one of the things that really stressed when it came to moving averages, and one of the things kind of like spends a little bit more time going over is that moving averages should be a guide, right? They can really help you develop like nice trade ideas, and they can be your entrance points, they can be your exit points, but it's about finding what's relevant, right? So not every moving average is going to be relevant for a stock. Not every moving average is going to be a significant indicator on that stock. Sometimes stocks love moving averages and they really respect them well, and then other times stocks could care less and they move more on news and momentum and volume, right? So when I use moving averages, and I mean you hear me talk about it all the time, it's a combination of things, right? So it is finding a quality pattern, right? Looking to see where the significant areas of resistance, support are, and then using what the chart is giving me, right? Like, and then developing an option strategy around it. So triple D, right? And this kind of like more broadly, like this kind of factors into what I'm thinking right now is like tech improving, Nasdaq improving. If we're going to start going on a little bit of a run, I want to find things that maybe haven't woken up or haven't really gone crazy or gone parabolic. So I'm looking at names that are decent reversal candidates off their highs that could still be waking up, right? Triple D, right? Obviously, like this is one that is way off its high after a crazy January, February, so this kind of fit the bill for me. Now, in terms of like trading, I mean, you can see that it's formed like this nice pennant wedge pattern, right? Increasingly lower highs, increasingly higher lows, right? So you're getting closer to a resolution point. Now, when I remove these trends, you can see that what's really causing that is, in terms of the resistance, is the 20-day, which is this pink line. So in this case, it's fairly obvious that the 20-day is significant because the stock bounced, failed at it multiple times in March, kind of pushed it lower, and then when it just bounced recently, it failed at it again, right? So with the stock in this increasingly tight pennant and nearing a resolution point, when it comes to like a tradable entrance, then obviously this 20-day is going to be significant, right? Because the 20 days mark the top on multiple bounces. It's obviously a sizable area of resistance, and once it clears it, I would want to see volume, and I want to see the price start to accelerate through it, and that to me would be like a signal of a resolution of this tightening wedge pattern, right? So when it comes to like an option trade, right, like to see it move through the 20-day, and then once it does, in terms of like the targets, well, on the chart, the bounce high, right? That was the previous bounce high in March, 34.35, which coincidentally also lines up nicely with the 50-day, which is this black line. So when I'm designing option strategies, like, and I'm trying to figure out, what contracts I want to go, what my possible targets would be. Well, in a case like this, you have a bounce high, which kind of lines up with the 50-day. So, using spreads, I might design an option strategy that, like caps the potential spread around the 50-day, assuming that the 50-day will probably be a significant area of resistance the first time it gets to it because it was a significant area of resistance when it got to it in March, right? Also kind of coincides with the March bounce high. So I'm using the moving averages both as an entrance and as a potential exit. And then when I'm looking at the option strategy, it's kind of, if I'm using like spreads, I might design them with like, the moving average as almost like the exit point, saying like, selling off upside above it because I think the moving average could be like the top of the move, right? So this was something we talked about, and I thought Triple D was a good example of that because it kind of highlights a few things that are pretty relevant to the conversation. But again, I mean, it's using what the chart is giving you, right? And in this case, the moving averages are giving a trade. I mean, they're providing entrances, possible exits, and not every moving average is going to be relevant. Not every moving average on a stock is going to be significant. And sometimes you just need to wait and see if it is going to be. And then once it's established support, once it's established resistance, then you can really start to use that and design a strategy around it. All right. So if you like this video and you're looking for more information on trading options or utilizing these moving averages to design option strategies, please follow up with the link in the description of the video for more information on options to play. Hope you have a wonderful night. Stay well, and I will talk to you ultimately.